Great to be here today. And it's great to have my incredible friend who I've never met in person, Noble Drakoln. My name is Gary Fowler, and I'm your host. I'm a serial entrepreneur and investor, done 16 companies, two unicorns, love artificial intelligence, and it's with great honor and esteem that I introduce my friend Noble. And again, we've met in, I guess, March timeframe virtually. We've been involved in many events together, panels. And Noble's the managing director of Drakoln Capital, and is a serial entrepreneur, investor, writer. He appears as an expert on television. He's He's a crypto guy, AR, VR, and startups. And with great honor today, Noble, take it away.
Hi guys. This is Noble Drakoln. How are you doing? I got the kids with me today, so sorry, Gary. They're all hanging out.
Oh, I love it. That's really good.
Get them in the background. Yeah. So I wanted to reach out to you guys. I'm glad to have me on, Gary. It's good seeing you all the time. And the reality is, Drakoln Capital Partners kind of started out. Say hi, Morgan.
Hi, yeah.
The Drakoln Capital Partners really started out as an outgrowth of my 28 years in the investment business. And, I started off when I was 17. I got my license when I was 19 as a commodities broker. And since then, I've written 7 books on trading and investing. So, the last ones were Winning the Trading Game and Trade Like a Pro. And they came out by Wiley and Sons. Hold on for one quick moment, Gary. Sorry. So the reality is, from then, I didn't really expect to be in the investment industry. Yeah, sorry about that. Nobody bothered me at all, Gary. When you're,
I've never seen it. I mean, it's unbelievable. It's great to see your family, Noble. It's great to see you.
I got 5 kids, and my oldest is 23, and he's in medical school. And then all the way down to 832. My wife actually works in the emergency department doing mental health triage. So this is her 1 of 2 days that she's on. And so there you go. And everyone was downstairs, and I had all my time before this. So then all of a sudden, right when you started, everyone jumps in.
Well, that's part of the pandemic. The beautiful thing is we get a chance to be home with our families. And, I've seen you so many times. Working from your place, although this room looks a little different than the ones that I've seen.
So we're in a split level home, and so this is the top floor, and so of course everyone gravitates towards me when there's nobody else around. So the reality is, sorry about that. So when I got started in back and started doing what I'm doing now with Where Play Games, I really didn't expect to be dealing with investors and dealing with people all the time. The reality was I had retired from my hedge fund. We had a $30 million hedge fund. We were trading gold spreads and doing bear put call spreads. And then we got impacted by MF Global collapse. And so when that happened, I ended up thinking I was going to retire, to be honest. And an idea hit me because of my then 4-year-old son, he's 9 now, about taking augmented reality and combining it with clothing. And I entered back into the investment industry because I couldn't raise capital. I went back to all my friends who I'd raised money back in the day institutional, but we were doing SMR in the 90s and late 90s and 2000. We were doing the digital cellular transformation of cell phones. And they just were like, well, things have changed. Everything is completely changed in tech. And in fact, you're getting involved with augmented reality when nobody else wants to get involved with it. And so that made me look towards the 506C and start focusing on raising capital in a whole different way. And that whole entire focus was dealing with the credit investors, going back to my database of about 125,000 investors. And then just going in that whole entire direction. And so that just led me just down a whole new path of, okay, there's a whole nother world now where you've got accelerators. I joined Founder Friendly Lab in San Jose. We hired Perkins and Coie as our attorney. We started doing the accelerator in Los Angeles. And there's a whole nother world where people are really trying hard to bring more people of both color, women into the whole VC world, but also giving them all the tools necessary to develop their business. And then that's when I psychologically changed my mandate. I actually became an advisor for accelerating.la.
And then what about, in terms of where we are today, what do you see in terms of diversity? I mean, what's happened in the last year? What do you see the trends? I mean, from your perspective, I mean, we've seen a lot since the April timeframe in terms of diversity, right? In terms of opportunities being equalized. And every day when we're on the calls, I'm on calls with Africa, with Indonesia, with Singapore. I mean, people that honestly that we wouldn't talk to. And one of these panels that you and I are on, it's incredible. I got to tell you, the people that we've met are some of the, come from some of the wealthiest families in the world. They're kind of like in stealth mode, and it's a great opportunity. But what do you think? What is the state today of, diversity in the marketplace? And, you and I have talked about it in terms of, blacks in tech. I've been a proponent of it for years, right? 13, almost 14 years. And I don't even know how else to go about it. I mean,
No, nobody does. So I've been blacks in tech since I started getting in tech. So that's my whole life. So,
I almost forgot.
So I'm just saying that, we're nobody, it's kind of one of those things that if you have a passion, I know some great AI developers, security guys who are African-American in tech, and they're deeply involved. And it's just because that's what they gravitated to. But as a cohesive, like movement, it becomes a difficult idea conceptually. You have these great events that Google throws, promoting their current black employees that work in their companies. You have all this great stuff happening. And I think that's kind of really where it's at, Gary, is that now is just people making it visible that, we've been here, we've got degrees, we're a part of the ecosystem and making, and the whole thing. I think the difficult part, and, I was talking about it just earlier, actually, on our favorite VC TV, there's a misunderstanding that if you have all the right components, you're going to get capital. That's not the case. Whether you're black, woman, white, 99% of all the projects VCs get are turned down. And it doesn't really matter what your ethnicity, it's probably a fraction of it, but most of the stuff just gets turned out and they're white founders and they're white male founders. This whole funneling system of, you have to deal with only angels, you have to deal with VCs becomes an issue. And we had our difference of view. You said, listen, Noble, I like to dumb money I don't want to bother with. I want the money that's good money that, they put 5 million, 20 million, and they just kind of step away and let me be what I want to do. But I think that sometimes it's unfortunate, but part of this whole crowdfunding idea that's evolved has allowed dumb money to get involved. But sometimes it's really the only capital some people can get. And there's a pathway to getting a couple million to start their business, or 1 million or $500,000. Those ranges where it's almost impossible just to make your MVP. And I think the best thing that ever happened was this Jobs Act that started allowing small entrepreneurs to just get access to capital to get their MVP, get their alpha, beta off the ground, and then try and prove an MVP, minimum viable product that could sell. And I think a lot of companies needed that. It's almost easier to get 5 or 10 or 20 million than it is to get, $150,000.
Oh, I agree. Noble, I got to tell you, the dumb money. So this is a real situation. They'll remain nameless, but I was in a situation with a startup, and this guy is a very, very wealthy guy, billionaire kind of guy, invested into a company in another country, and he gave them $250,000. And so we got involved with the company. This guy comes in and says, I think this is a great opportunity. He said, but since you're going to be doing this in the US primarily, I want my 250 back, and I want another 500,000 for, and I'm like, what? Because it's a great opportunity now, but I want to take some of my money off the table. You know what I mean? I still want 4%. I was like, it's crazy. And the one thing that I found, having really smart money, I don't know about your opinion, but having smart VCs involved, they really do help. I mean,
Oh,
they're
no.
I mean,
No,
they're
my opinion.
advisors, connectors.
I completely and 100% concur with you that having the right VCs involved, they can introduce you to new business and new cloud. It's just sometimes that there's that stopgap measure where, and not all $250,000 come with those kind of bad terms. But I will say that with the way the new rules have been laid down with the 506C and how you draft your private placement, I believe really it's a founder issue in educating their investors on how they're going to interact and what they do.
Hmm.
Oftentimes, dumb money can be brought up to being intelligent, right? That these
Hmm.
guys, they have relationships, they have business acumen, they have capability to be advisors, but the founders themselves have got to set the parameters. And
Hmm.
so I believe that that's this kind of first step before you even get to the VCs, that oftentimes you need to create your board. You have to create your team of people that are differential opinions from yourself early on so that you can even know how to communicate and talk to VCs and not always feel like they're out to get you, because there's always those first founders who deal with the VCs. And oftentimes when a VC makes a recommendation, they're constantly resistant to the VC founder relationship because they've never had anybody who had a dissenting opinion to them in
Hmm.
theirs. Founder syndrome is a real syndrome.
Hmm.
Founders get in, they want to do it their way. They've always done it that way. And you're like, okay, that's great when you only have, you know, 100 clients, but now we're going to 10 million. It doesn't work anymore. You have to
Hmm.
change. And so there's always that intersection. So I completely, I've dealt with family offices, I dealt with VCs, I dealt with seller groups. But I think that when you talk inclusion, the whole entire Jobs Act just allowed people who before had never been able to talk to people about investing to get their first quarter million in to make that minimum viable product to sell and then develop their true problem solution thesis.
Hmm.
And a lot of us, when you start, you're not starting off wealthy. You're not starting off with the capital to burn on a bad idea. Yet
Hmm.
I've been a serial entrepreneur my whole life. I've had great exits, nothing unicorn like you, but I've had great exits. But then I've also had,
But listen, there's one thing having a unicorn. It's another one having the majority of a unicorn. I'm the guy that gets the breadcrumbs. You know what I mean? The tiny breadcrumbs,
I'll take a breadcrumb of a
tiny,
billion,
tiny, tiny
10 billion.
little breadcrumbs. I come
Yeah,
in,
yeah.
I feel like a bird cleaning up at the beach. You know what I mean?
Yeah,
Like a
those
seagull
breadcrumbs
when they
are
come
good
in.
breadcrumbs.
I'm
Don't knock
lucky
it.
to get a little crumb, but the crumbs add up. But and that's it is a challenge, right, to raise the money. And I hear it from a lot of entrepreneurs, all the problems that they have because they can't raise money. And the other thing is they're not good at it, right? They're introverted, they're not good at pitching, they don't understand, the art of the pitch and what a pitch
Well,
should
yeah, they
look
don't
like.
understand what it requires. I mean,
Right.
Gary, when you started out in this industry, I remember the first day I started working as an assistant to a broker at Smith Barney. He handed me a deck of Dun and Bradstreet cards. They were all written up on this guy has no money, not interested, and he handed me a script to pitch these shares and to set up the introduction. Man, I called 300 people a day every day for almost, was it 9 months, 10 months before I got my first deal. And so that's what's required to reach an investor. People don't know that you have to spend it's work to find the investments as much as it's work to build the business.
Yeah, no, I agree with you. And it's not easy. The other thing that's very interesting during these panels that we've been on, many times I've heard investors say, if you bring a deal to me, you, Noble, they're going to listen. But if somebody comes as a startup, they're probably not going to get their attention. And I can't tell you how many times I've heard that. So, the art of the connection is really important because it's a trusted network and they're I get it myself. I mean, my LinkedIn is, inundated with all kinds of email requests to the point I can't really respond to all of them. And
If you send me something or I talk to you, you and I will put you to the like literally the top of the heat. It'll immediately happen. If it's someone who's randomly heard us, and it's not because we don't like them, not because we're not interested or their ideas not great, but my always default response is start out with the accelerator and incubator that we have. Goes, if you don't really fit my profile, go talk to Alessandro. That's why he has them accelerator. That's why we're starting our $15 million venture fund with them, so that those people go through the process, can get their 50 to 100,000 to start. We want to, we have a 300 company mandate, but I'm quickly to say go through that space if they're not someone I know, because oftentimes, and this is why we like the accelerator. That's anywhere from 2 month to 3 month process to go through the accelerator. That's then how we end up getting to know them, and they've got to go through. They get educated. We know that they're going to know what to do with the money. They know what the cash burn through rate is when they ask for help before the cash burn through rate runs out. They have actually a product that's been iterated, and so all of that. But if you send it to me, Gary, I'm like, okay, that sounds like a great idea. How much do I need to invest? Okay, I can or can't afford to do that right now, and that's it. It's an instantaneous conversation because I know you've already done the legwork, you've already vetted it, and that's where those connections come in. People trust the people that they're talking to based on their judgment call.
Yeah, no, I agree with you. So, what gets somebody's attention? So, somebody sends an email to you or LinkedIn. What would you look at? How would a startup catch your attention? What would they have to say that would say, I'm going to take a look at this message?
I really wish that these startups would just say, this is the problem, this is how I solved the problem, and this is how we're going to make money solving that problem. If it was just literally an ABC, like one liner for each one of those, that would immediately make me know that they understand what they're trying to fix. They do have a solution, and then I can depending on what the profit outcome is, then I can say, okay, this is something I want to be involved in. And then finally, they should just tell me what they're asking from me.
Mm-hmm.
You invest 50,000. Do you have access to $1 million? Do you, whatever it is, and then I can then determine on C and D. If someone sent me 4 lines so simple like that, then the conversations would go so much quicker, because then I could say, hey, you know what? I'm not the guy. Go talk to Gary. Like someone had a medical product for me, I think, and I sent them to you
Mm-hmm.
regarding whatever it was. I just said, okay, talk to Gary because I know that you're in that space.
Mm-hmm.
But that's the same thing. When people kind of show up, they speak plainly. Just speak plainly. It doesn't have to be this long 8 paragraphs of like stuff. I'm not reading it, and I don't mean not to not read it.
Mm-hmm.
You're just going to get another 8 paragraphs back of, okay, this is my standard stuff that you have to do to know where you're at.
I like that. And so, what about for me, if somebody has revenue, so the main thing for me as I look, there's really 3 stages, right? There's acceleration, there's regional dominance, and there's global. But I look at if they've got some revenue, and my critical piece is if they've got $500,000 in revenue, I know they probably have product market fit. I know their team probably works together and they've got a good job and they're ready. They could be ready to go global. And so I look at that. I don't know about you, but I also look at teams now. Used to be, you're looking for these 20-year-olds coming out of Stanford or MIT, building these companies up. I look for different things now. I look for diversity within the team, and I actually look at intergenerational teams because I know, especially today, that I know that they probably have some contacts that can help them really go out, and they're not going to, how do you get to Silicon Valley today? I don't know about where you are right now in LA if it's locked down, but there's curfews, there's all kinds of things, right? How can you travel? So I look at that. So I look at, as I said, diversity, intergenerational teams, and I want to make sure that they're really, their teams are decentralized and they've got R&D done in some place where it's done for the right kind of price, right? And they're great. So it's changed a little bit over the last year because I wasn't as focused on it now. I talked about intergenerational, but now it's really important because I know if they're a startup from Indonesia and they're coming out to Silicon Valley, the probability of having the network to be able to make it happen isn't high, and they're going to fail.
Yeah, no. So I like, so me, I still am liking that pre-series A, pre-seed, post-secondary seed space, right?
Mm-hmm.
So it's okay if they don't have $500,000 in revenue. plus it's okay if they're pre-revenue. I'm fine with that, as long as, and you hit the nail on the head, they have a team that is functional,
Mm-hmm.
right? I've been on teams, and I know you have too, where dysfunction creeps into the team, and you realize, that the founder is not going to have a way to develop or grow. That
Mm-hmm.
there's just nothing going to happen here because the founder may be driving the vision, but the team does not believe in the founder,
Mm-hmm.
or somehow there's some kind of breakdown. And so I think that's key. But I also am concerned about teams that are too large too. I
Mm-hmm.
think that you don't need 6 and 7 people teams for, especially in this pre-seed seed level.
Mm-hmm.
If you have more than 4 to 5 people, I'm always concerned because someone has to be the driver. That
Mm-hmm.
I don't want to come in and tell you what to do. I want to be able to pinpoint and see who is leading the company
Mm-hmm.
and who's running the company. And if you can't pinpoint that person, then I always have concern. Conclusion is great, but there's always that mix, right? Where inclusion does not equal charity.
Mm-hmm.
I have a big concern with the idea, conceptually, the idea of quote unquote affirmative action, whether
Mm-hmm.
it's hard or soft, is it sounds great that you want to have different people on the team that are women, who are Latino, who are African American, and that they all have these different viewpoints. But if you're doing it in a way that is truly not to enhance the team, but to be exploitive of the team in order to gain capital or to find yourself in the right room, but those team members are not being valued and it's not visibly valued. It's great
Mm-hmm.
to have an African American founder or a Latino founder, but then 90% of your employees are not non-ethnic people, right? And you're like, well,
Mm-hmm.
okay, what are they doing as the
What's
core
wrong
team?
with this picture, right?
Exactly. What's wrong with this picture? How, okay, all of a sudden you brought in these great people for diversity, and still you've got you got a woman in, and you only got 2 women employees. So is that really a diverse team? Or are you trying to window dress? And so, is this something that's indicative of the culture? Is it from top down up? So my view is that, are these teams in search of women programmers? Are these teams in search of African American programmers, or do these people find artists? Like, what work do they do in the company is more important to me than the work that they do with the team. So if it's two
Mm-hmm.
founders who team wise are 2 white males, but the whole entire business is fully inclusive, they go a lot further than a company that has got the most diverse board ever, and then 90% to 95% of all the employees are white or of one only specific ethnicity, typically Indian or Middle Eastern, because those are their programmers. You're like, well, what happened? There's a disconnect in what you're trying to present and what it really is. I think someone said it best. Black Lives Matters is more than a hashtag, and then that whole concept, it's more than just inclusion or diversity. Is not just an ad campaign. It's something that should be culturally incorporated. And so, um, it, Gary, you and I know the statistics. There are more white males in this country than almost anybody else, right? We look at the Appalachians, which has a huge pandemic. We have all throughout the South. We have all these issues, and inclusion has to not only include both race, has to include poverty. There are a lot of just poor people in the United States, and it's something that just continuously gets swept under the rug and not addressed. There are more Caucasian people on welfare ever in the since in the history of welfare, and people still don't talk and address these issues. There's a reason why middle America is disenfranchised. There's a reason, and this is not it's an apolitical statement. People are just struggling across the United States, and it goes beyond just one race, one ethnicity. And inclusion has to be fixated on bringing all of America up in a way that it empowers everybody to feel good about themselves together.
No, I agree with you. I mean, the one thing that happened over this digital transformation in a positive way is that we understand that we can do things. I don't know. Well, I just saw it with your kids, right? I'm home. I'm not in Silicon Valley. I'm actually in my house in Palm Beach, and yet I'm highly efficient and I'm doing things differently. I don't, bike sales were up 75% year over year. You can't buy bikes. It's really, really hard.
You can't buy desks. My wife was getting ready to. So my wife is a licensed clinical social worker. So she's a therapist, and right now she's doing it in the emergency department at a local hospital. And she was thinking about just doing some kind of teletherapy or telemedicine where she does teletherapy. She went to order a desk online. She went to get the desk. She was kind of debating between different desks. Within 24 hours, all of her options were gone. All the desks that she wanted, all the desks that she liked, sold out.
Yeah.
And 6 month back order. She's like, "What are you talking about? I can't get any of the desks." And so she hasn't got ordered a new desk. She's at a folding table. So it's like we're like, everyone is working at home, and we're all trying to find that a work life balance for everybody, and everybody get ahead. Uh, but the concern is that the digital divide has never been more apparent than ever
Mhm.
before, and that has to be inclusive. Something has to be communicated, and so there's always that. As a capitalist, you always fall in that line of socialism, capitalist thoughts, right? What does the state be a part of, and what is capitalism? But
Mhm.
the internet has really become such a ubiquitous necessity in this country that it has to be uniformly applied across if we're looking for any type of productivity and education to be inclusive for everybody. It cannot have these, where just 10 miles from me people can't even log on properly, and so kids are literally falling in my zip code, are falling behind in school because they
Mhm.
have intermittent access to the internet. That's not inclusive. That's you're keeping
Yeah.
everybody out. And so there's little things like that I think have to be addressed in the overall schema. uh, Blockchain, I ended up starting this gaming company, which we were significantly involved in blockchain is non-inclusive, but it's just not inclusive to everybody. People still are trying to figure out how to handle public and private keys. We talk
Mhm.
about AI. The only way to succeed at anything blockchain long term is that you have to have your personal AI assistant that's manipulating all this stuff for you, because you can't save the data because someone can hack and steal your information,
Mhm.
but you can't just write everything down and then constantly looking through notebooks, because if you lose that, then you have no access. You
Mhm.
literally need this AI assistant who is your buddy, who's going around the internet making sure you can have access to this stuff and protecting you from the hackers.
Mhm.
This is kind of where it has to go. But at the same time, I talk to people who have no idea still what Ethereum and Bitcoin is and how to get it and where to buy it. And they're watching it on the news every night, wishing they could get involved. And it's typically, ethnic people. They don't know how to
Mhm.
even get involved and how to
Mhm.
log on, and the 50 steps it takes to just do one thing to move money. So inclusion also involves education. I think it's a big way, and it, uh, where that education comes from is from people like us, just sharing and trying to help people drive that conversation.
No, I agree with you. And, it's interesting because as we go through this digital transformation, I mean, I'm talking to folks in Nigeria, all over Africa, and, it's on one side of it's opened up. We understand that there's a problem because we've all had to go through the same challenges in terms of, I did here with my MacBook. It was lucky right before the pandemic really, took hold. I knew I wrote up what's going to happen. I looked at this, the flu of 1918, and I thought these are the kind of challenges people want to communicate. Unfortunately, I didn't buy Zoom. I kicked myself like crazy because I
Yep.
didn't do it, even though I was one of the first customers. But and I understood. I just, it's opened it up so we see where there's a problem. I mean, look at it. It's amazing, Noble. We talk about, we laugh about the toilet paper issue, right?
Yeah.
But it's a big issue in San Francisco today. It's now an issue again, right? And so here
Yep.
we are with quantum computers, and for God's sake, we can't even figure out how to get a toilet paper to somebody.
No, but that falls along the whole spectrum. When people actually, most people are unaware that not only was the toilet paper out the first go round, but also different food items were out, and then people also had a significant number of people had to go to food banks because the stimulus checks weren't getting to them fast enough, and so
Hmm.
they were actually going to food banks in order to receive food and or picking up food for friends and acquaintances to make sure they had just standard food.
Hmm.
Uh, there's a whole issue where there's such an aggressive supply chain to the restaurant business that the farmers who supply restaurants, again, my commodities background, right, 27 years.
Hmm.
So, yeah, I still get commodities news. the farmers who supply the restaurants specifically had no effective way to retool and make the food available for retail or consumer goods. So there were mounds and mounds of potatoes rotting. There were hogs that were slaughtered that were never put into the food supply chain. I mean, there's a lot of stuff that, no one, what do they say? Nobody wants to know how the sausage is made. They just want to eat the sausage. But if
Mm-hmm.
people look at that time during the pandemic, a lot of uh, animals were lost, a lot of food was wasted unnecessarily, but because we've got hyper efficient in doing what our supply chains do, we never created any kind of mitigation to make sure that the food was going to regular people. So there's a significant amount of food that was wasted. I want to say on the order of 60 to 70% of the food was just wasted because there was
Wow.
no supply ability to get there. Now you can run my statistics, it might be a little bit less, but it was such a significant amount that
Mm-hmm.
farmers were impacted and there were subsidies provided to those farmers. But yet the food was there rotting and people were starving, right? They wanted to get food and they couldn't get food. I mean, it's like when like they said, if you could have got trucks and sent that all to the food banks, everyone would have been okay. But there was no food, there's no supply. Nobody knew how to do it. So,
Mm-hmm.
in the digital transformation, there also has to be like a real world connect. Here's a digital transformation. Here's how supply chain operates, but also here's how we come up with the problem solution sets. This is where
Mm-hmm.
the entrepreneurs have been to solve and mitigate those. And a lot of people did it. They started coming in at the last minute, creating solutions, getting approved to take the
Mm-hmm.
food. And this pandemic part two won't have the same issues, but it really blindsided everyone that the restaurants were not buying food and they couldn't sustain the buying of food. I think Belgium, largest potato farmer had to waste their crop because most people buy their French fries at the restaurants, and only a few people buy it at home. So they end up wasting tons and tons of potatoes and couldn't find a
Mm-hmm.
country to actually pick it up and buy it from them. So these are real world issues that also need physical solutions.
Yeah, that's great. And we're coming up to the top of the hour, and I wanted to get what are your predictions for 2021? What do you see in terms of technology? I mean, what's really interesting from your standpoint, and then the second part of it is what can we do to help in terms of diversity and making the world a better place?
Yeah, I mean, like, so technology is it? I'm running Where Play Games, so I'm the president of Where Play Games, and we're doing everything in AR, but we're also combining it with non fungible tokens.
Mm-hmm.
And the gaming industry, $100 billion plus industry, they've got over $6 to $7 billion in the secondary market of people swapping skins and avatars and items. And there are so many people unemployed, but who play games. I'm a big proponent that the next wave of profit opportunities, we had social media and YouTube and we have Twitch, but the next wave of opportunity will people creating secondary incomes from the video games they play
Mm-hmm.
because they'll be able to acquire items. They're going to create what's called non-fungible tokens where they
Mm-hmm.
own the item that they win in the game, and they'll be able to create value. The biggest upset since the World War II era is that the baby boomers were able to accumulate all the wealth. Inflation helped them increase it, so that millennials really can't afford to buy homes. They really don't want to buy cars, but cars are non-reasonable compared to what their paychecks are.
Mm-hmm.
When you add insurance and you add all this other stuff, and so they've
No,
never
I
really
mean it's crazy with car prices. It's
crazy.
car prices are like houses now. You go out for a car. I don't know about you, but I go out and I like to buy low mileage used cars because I don't want to pay the price.
My whole life, I buy BMWs, Mercedes, anything under 50,000 miles, low use over the last
Yeah,
6 years.
yeah, me too.
I have like a set parameters, and if it's and then the older the person was who owned the car, the better because I know they didn't get a lot of wear and tear, and it wasn't a lot of freeway miles. And so yeah, I've got a whole parameter for the last 20 years. Uh, but that's the thing. So you have all these millennials who can't afford stuff, and so they've grown up in a world of renting. Whether they rent Airbnbs, whether they rent like things like Turo cars, and they're all on subscription services for everything. So they don't have ability to accumulate assets, and they're not eager. With Robinhood was their first entree to buy stock and really accumulate it.
Hmm.
Well, the video games have now become a way that they can build assets, and with decentralized finance in the token area, they can actually borrow against those new assets
Mm-hmm.
and get loans and get cars and buy homes from playing video games. And so my biggest thing that I see going forward in the future is that this whole gaming economy is going to be highly explosive in the sense that these kids are going to have assets, and anybody who plays them are going to have assets that they can now borrow in decentralized finance
Mm-hmm.
to normalize their lives as they start aging in the 30s and 40s,
Mm-hmm.
wanting to buy homes and establish themselves because they'll have 20 different type of Pokemon that are worth $100,000 and $200,000 now, right? That are all digital on the blockchain with provable transmission. So that's a real push that we're doing in our company. We
Mm-hmm.
just released our first set of NFTs this past week. We've done phenomenal on a soft launch, so we're really going to be aggressive coming into 2021 in putting them out. And so I really am a big fan and believer. As far as adding and creating inclusion, one thing that I decided to do was I joined two accelerators early on. When I came back to the industry, I joined Founder Friendly Lab and I joined M Accelerator. And so my partner in M Accelerator, Alessandro Mariantoni, great guy, he started M Accelerator. I joined in and said, look, let's create a venture fund, 15 million. Every year we go ahead and make investments of about 50,000 to 100,000 to at least 100 companies a year for the next 3 years. And
Mm-hmm.
as we do that, we'll be able to bring people into the accelerator incubator. We'll be able to vet them, train them over the next 3 months with
Mm-hmm.
different cohorts, and we'll create a strong alumni association. He already has 200 plus alumni, and by focusing more on inclusion and really reaching out to all the local people in Los Angeles who are women oriented incubators and black oriented and Latino oriented, and really pulling them into the accelerator, we're able to now create and grow those relationships
Mm-hmm.
and help people with their MVP. Like I said, sometimes the most difficult part is getting that first $500,000 to literally build the business, hire the people, create the product, and put it out. And that being the case, we said, okay, if we're one of the early seeders, 50 to 100,000, and then our relationship with VCs and local angels, then we can start having secondary movement as these guys start proving themselves in the MVP. So
Mm-hmm.
that's how we've decided to do it. 300 companies over 3 years from 2021 to 2024. We wanted to start this year, but we literally, when we started, the pandemic hit, so it's kind of threw off how we were developing. But with the vaccine coming out, hopefully 2021 will be a different year. And so that's how we're doing it. So anybody who wants to join in with us, be a part of M Accelerator, and reach out to Alessandro. Wants to be a part of the fund, join in with us. We believe this is a strong and good mandate, and we get enough deal flow. We have about 1,000 people who try and join us every year, and that's always been the issue of most investors. Where's the deal flow? So if
Mm-hmm.
they're coming through us, they're being trained through us. You know that they've been fully vetted, and you get to watch them as an investor as they go through the process.
No, that's great. And how do people get a hold of you, Noble? What's the best way to get a hold of you?
The easiest way is always LinkedIn, Noble Drakoln. I was one of the first people on LinkedIn early on, and so or you can reach me at Twitter at Drakoln. If you want
Mm-hmm.
to check out our gaming company, just go to whereplaygames.com. You want to go to check out the accelerator. It's maccelerator.la for Los Angeles.
Mm-hmm.
Uh, and you can find me on Twitter at Dracone. I don't use it as much, but you can definitely reach out to me and I'll respond back to you. Uh, but overall, call Gary. So you want to talk to me to reach out to
We're
Gary.
here to, I'm happy to help. You can reach me. Same thing, Gary Fowler, LinkedIn. I'm also on Twitter. Happy to help. Noble, it's great to have you. And through 2020, I remember we used to say everything in hindsight is 2020. I hope not. But it's been great, seeing you this year and spending time, and you've been able to bring some sunshine, into my life, and the whole group that we've been involved in has been fantastic. It's amazing actually to be able to have those kind of connections. So
Kind words for me, Gary. And like I said, you and I'll figure out how to work together. Like I said, I'll get on the calendar at one time. I was very happy that you invited me to be on the show because you've had some really great guests on, and you guys have done some really deep and serious topics. And I just want people to know that as a closing thought, diversity and inclusion, it takes all of us. Don't, but I also don't believe people should look at diversity and inclusion as a charity. It's not a charitable event. We don't want people to think that because it's not a favor, it's an improvement. It's a outgrowth. It's a true development of your business to add new friends, new acquaintances, and new people who you value to be on your team. Gary and I had no relationship whatsoever before 2020, and we've been on, like you said, dozens of these things with VCTV. That's a testament that making new friends and new acquaintances is not a bad thing, and building relationships and creating these bridges. And so diversity and inclusion really should be an organic outgrowth of the desire to improve, tap into new markets, wanting to grow the business, seeing that America is not going to be, is already said this is the first year based on census that the majority of children who are here in America are non-white children. That this is the progression of our country, and we have to embrace it because otherwise the alternative doesn't work.
Yeah, I agree. Thanks again for taking time out of your busy schedule. Thanks for joining my show. And we'll be back next week, same time. Look forward to seeing you. Stay tuned and have a great week.